virtual meeting. It would be lovely to be with you, but we know at the moment we can't. So who are we? So big welcome to you all. I'm Gudrun Rabbits. I'm one of the hosts today. I'm a bit of one of those sort of portfolio vets, done a bit of everything, been part of the British Veterinary Association, done politics, done small animal, been sat where you are, slightly worried about my finals, got through it, it was amazing, and then it starts, okay? So why are we here today? We're here to help you through a little bit of stuff that you might not have thought about, okay? This is us. We are VetYou.co.uk, and we started off because, like all of us, we've all done different things. Not one of us has done the same thing. We've all done a portfolio of stuff. And the way that we started was very different. And we've all been chatting, and we found out actually what we didn't really think that much about, some of us, was our finances. Some of us got some talk at university, some of us didn't. And actually, although we've all done different things, the things that have allowed us to do it is whether we had the finances there and had some financial security to begin with. And for some of us, we have that, and for some of us, we're putting that in place. But we wanted to share our journey with you. We wanted to talk to you as veterinary surgeons to veterinary surgeons about what finances are, and particularly about what it is in your first 100 days. And that's where VetYou has come from. But we know that veterinary surgeons can't do everything, definitely shouldn't do everything. We're good at some stuff, and we need help with other stuff, which is why we have partnered with some professional financial advisors to help us on the journey. And we have one on today, the great Andrew Snowball, who you will see up in your corner there. He's just said hello, and he's going to be talking you through all the nitty gritty stuff. You've got Paul on there as well. He's going to be talking you through some of the things that we're looking at so that you know what's happening in your first 100 days. But what is your first 100 days? And before we talk about your first 100 days, it is fair to say this is a different time, okay? Every year is a different year when you come out, but this year in particular, we know it's uncertain. We know it's tough. I'm sitting here with the gangster style on, trying to be a little gangster in my older age, because I'm trying to also homeschool and learn about grammar to my right. Paul is on repeat of Peppa Pig for his kids. So we know that everyone's doing a little bit different, and we're all mucking in, and that's going to be no different for you. So at the moment, you might be feeling, why am I looking long term about my money, my finances? At the moment, it all feels very short term. What you thought you might have had planned might be actually really different, and that's tough. We get that's tough. But I think between us, we've all got a good few years behind us, is we realized that the planning we did in our first 100 days of the job, that money that we had then and the things we did with it has set us up for the long term. So why are we doing this? Because we're thinking long term. We know it's tricky short term, but we're thinking long term, and doing stuff now, even if it's just little bits, even if it's little bits of action, will help you later on when, believe me, your career, your profession, it's amazing, but it will take a curveball. Mine has. I've done loads of different stuff, and setting yourself up now allows you those options to take that curveball. So what are we doing today? Today, we're looking at your job offer. What is it really worth? When I first got a job offer, they offered me 20 days holiday. I thought that was amazing, that somebody was going to give me a holiday. I didn't realize that was statutory minimum, and they had to give it to me because I had no idea. So there's things in your pay that have to come out. So what are you going to get at the end of it? And actually, I didn't know. And we know that some of us on this call bought a very big TV. That's fine, that's cool, but make sure you can afford the TV by knowing what's in your pay packet. We're also going to look at budgeting, and what does budgeting mean, and what do you actually need so that you can live, you can pay your rent, you can do your stuff, and what's the fun stuff? What's the fun stuff for now, but what's the fun stuff that allows you to be fun later on in life? Go traveling when we can travel, buy your house, do the stuff you want to do, take the curveball direction in your career. So we're going to look at that as well. And also, what you might think is the dull, boring stuff. And some of us on here did it really early on. Some of us panicked for a few years and then did it later on. And some of us are still in panic mode and are looking at Andrew all the time to help us out. And that's okay. You're all individuals. You're going to do it differently. My aim, our aim today is to make you think about it. So we're going to look at, how do you protect you? And actually, for me, never thinking that I would actually be responsible for anything other than my dog, I now have to protect responsibilities in my family as well. So we're going to look at that. Most important though is your thoughts. You're all individual. It matters what you do. So we've got Jamboard on there. You can stick stuff on Jamboard, ask your questions, tell us how you're feeling. That's completely anonymous. You can stick it in chat, so everyone can engage with it. If you really are wanting, you know, just a quick fire to someone and you don't want others to know, then direct message Ebony on Zoom, and then no one else will see it. Fire it all in. We're going to aim to answer everything you put up there today. We've got some breakouts at the end. We're happy to stay on later for those that want to grab some time with us. But also VetYou.co.uk has lots of resources on there for you. And everything that you put in tells us what's important to you, and we can then put it into VetYou.co.uk. So it's a resource there for you to answer the questions you have. So please just keep piling in there with your questions. And there's the digital delegate bag that we'll signpost to at the end that's got some fab stuff in there that kind of, some of it's from our experience of the old fogies who've been there. Some of it's actually from people who work in this industry. So it's all good stuff to help you take control of your finances and do a good job with it. And let's just think, first 100 days, you can make some massive differences for your entire career. So here we go. First 100 days, what is it? What are we looking at? We're looking at your job offer. Okay, so that's the start of the journey. You need to look at that job offer, know what it is, know it's right for you, and then you might accept that role. And in your digital delegate bag, there's some good stuff about actually, how do I work out what I want from a job? Because I'm different from my friends, my wants, my needs are different. The practice that I want to go into is different than that of my friends. But then the kind of exciting thing of the first pay pack, all right, and that it is pretty cool. I've got to admit, I still remember my first pay. But what is in your first pay, and what does that mean? And what are you going to get that you can spend? And then actually, it keeps coming. Most of the time, it keeps coming until you make a decision you want to go and do that curveball moment. But from that pay, you can set yourself up for a sort of a long-term financial security, because one day you will retire. I didn't think I'd be 18 years, and we say that very quietly, into my career at any point. And I hope it goes on for a long time, but it's not going to go on forever. So what I did in that first 2 pay packets has actually given me pension that I could never even consider now. And some of us on this call have done it, some of us haven't. So we can all sort of direct you in different ways. So I'm going to hand over now to Paul, who's going to take you through the first bits of your salary, and I'll be around at the end. You might see me pop in and out as I try and do homeschooling as well, but that's new normal.
Cool, thanks Gudrun. Hi, Paul here. For the first bit, I'm just going to have a chat about comparing salary packages. How can you actually compare different job offers? Now, I appreciate that there's an awful lot more to accepting a job than just the money. There's the culture, there's the location, there's the species, hours worked, all that sort of stuff. But just for today, we're going to focus in on looking at the finances and how I can compare different job offers. Am I getting what I should be getting paid? What am I going to get paid, etc., etc. So obviously there's the standard basic salary. That's whatever it is, 20, 30, etc., £1,000 that you're going to get paid. But on top of that, or around that, a lot of people, a lot of practices, a lot of employers will add extra little bits on to either entice you in or to sneakily pay you a bit less and give it you in a non-monetary way. Perhaps they don't have to pay you quite so much. So some of the things that you can have thrown into your salary package to look at are sort of up here on the screen. Starting off with pensions, they can be a little bit cheeky actually. Pensions is a cheeky one because unfortunately, in the veterinary world, we can be a little bit tight in terms of what we offer. Most pensions that are offered to vets out there are set at the absolute basic minimum. It's great if there are a few practices and a few employers out there who offer a little bit more, but most of them are giving you the bare minimum. So when they say pension, ask them. And if it turns out that it's only 3% of your salary, that's not them being generous, they legally have to do that. So they are giving you 3% on top of your salary into your pension. Bear in mind, that's very nice, but you don't get that for 30, 40, 50 years until you retire. Next one is CPD. Quite a lot of practices will throw in 500, 1,000, £1,500, £2,000, whatever it is, to pay for your continued training. Just be a little bit careful on this. It's great because it makes you better, it invests in you, but there has been some chat I've seen recently about clawbacks. If you leave, what do you have to pay back? And what's the time frame over which you have to pay back? I read the other day that there are a few new graduate programs out there that are looking at many thousands of pounds they're asking to back from you if you leave within 1 or 2 years. Now that might be fine. It might be a very good idea to do these because you get a huge amount of support and training and stuff invested in you, but there's a negative. So make sure that at least you understand what you're getting into. Lots of other benefits out there in terms of cars and vans and fuel and accommodation, and I'll come on to those in a sec. But just be aware that you will often have to pay tax. Even though they're given to you for free, you may have to pay tax on those, and we'll talk about those in a second. Professional fees, just quickly, I was surprised that they weren't quite as much as I thought they were. It's very nice when someone says we'll pay for your Royal College and we'll pay for your VDS cover. VDS cover is about £400 or £500, so that's what they're offering to pay for you. And our CVS is, I think, about 380 quid this year. So again, just have an idea of if you're comparing packages, what they're actually offering you in terms of hard cash. Bonuses, I don't think there are many practices that would give bonuses for new grads. I think there are 1 or 2, but mostly this comes in after a few years. Again, have a think about that. When you look at a bonus, is it achievable? If you offered £50,000 bonus, but there's no chance of getting it, well, that's not great. Also, some people are not very comfortable in the veterinary world with having a bonus. They feel that they're being pressured to sell. Have a think about whether that means that if you're happy with that or not happy with it. So now the important bit, what do you actually get in your pocket? What do you actually get in your pay statement? What do you actually get put into your bank account? Well, unfortunately, there are lots and lots of people and companies and government agencies which dip into your pay packet and take bits out. Starting off with your, let's say, salary that's coming in, the income tax, the HMRC will come in and will give you 12.5 grand free. That's you, don't have to pay tax on it. And then anything over that, they start taking 20p out of every pound that you earn, 20%. If any of you get lucky and start getting new grad salaries of over £50,000, fantastic, well done you. It then raises to about 40% at that stage. Extra, and I must say, I knew I was going to get taxed, but I didn't realize when I first started that I was also going to have to pay national insurance. Basically, it's exactly the same as tax. It's just another income tax. That's another 12% that they get taken off you. So 12p in every pound you earn also goes on national insurance above 9,500. Then a pension. Your company has to put 3% in, but you have to put 5% in. So it's not really you losing that money. You're just losing it for 30 or 40 years. You will get it back, but it's disappearing into your pension. And then student loans. Again, this is starting to get paid when you start to earn over £2,200 before tax a month. So once you start earning over that, again, the student loan company will start taking 9% of your earnings. So that suddenly takes what you think is going to be quite a nice, dividing your salary by 12 and thinking I'm going to get this. Suddenly it's not quite so much. On top of that as well is these benefit in kinds. Again, I had no idea about benefit in kinds when I first qualified, and I was quite surprised when I suddenly had all these things taken. Quite a few things out there, and there's an awful lot of detail around this and loopholes, and get more advice on this if these start to appear on your pay packet. But basically what happens is if your company gives you some money, gives you some products, a car, fuel, accommodation, these things like this, nice. You think it's free, but HMRC, the taxman, recalculates and says that you're going to have to pay tax on that. So it's still a nice thing to have because it's free, but you will have to pay whatever your tax rate is, 20% of that on top of it. I just put accommodation down there at the bottom. Basically, if it's nice and you are able to use it outside of work, you're going to have to pay tax on it. If it's needed for you to do your work, you don't have to pay tax on it. Accommodation is a bit difficult. Again, if you get offered accommodation, check that out. If it's, say, above the practice and you're doing out of hours and you need to do it for your job, you can probably maybe get away with it not being taxable. If it's away from the practice and you're not having to do out of hours, it's going to be very difficult. But there's an awful lot to look into, so get more advice on that. So we'll just do a quick poll now, Ebbs. What do you think, if you're on £30,000, what do you think is actually going to go into your bank account once everyone dips their hands into it? Have a little click, see what you think.
So these are rough approximations here. So we've got 2,500, 1,900, 1,600. So we're voting away. 60
away. Excellent. No one's going for the 2,500, I see.
Nope. I genuinely thought that's what I would get in my first paycheck.
I did too.
That's why I went out and bought an Audi A3. Which is not sensible.
Excellent. Well, that's most people voting there. So let's just have a quick look. Now, there's two columns here. It's a bit confusing, but let me just explain that. The reason for the two columns is actually, if you get a job in the next few months after graduation, tax years run April to April, and so you get all the benefits of a 12-month tax year, but perhaps you're only going to work for about 6 months of that, from say August, September until April. So actually you end up paying less tax in a half year than you would over a full year. So the first column is just if you get a job this tax year before April 2021, and then after that, after the 5th of April 2021, that's sort of what that salary then ends up being. So we've just taken an assumed salary of about 30,000. We've said that you're paying about £3,500 in tax, £2,500 in national insurance, whatever those benefits in kinds are, whether you're having a car for private use, whether you've got accommodation given to you by the practice and you're not able to claim that that's needed for your job, all those sorts of weird benefits in kinds. Private health insurance, again, is a benefit in kind. You may have to pay a little bit of tax on that. And what we've done is we've put in the digital delegate bag, we've put an actual pay statement, a pay slip, and broken it down and explained all the 3-letter abbreviations and all the weird bits on it. So after this, if you want to have a little bit further look and understand how what you're paid and what you're actually paid gets worked out, have a look at how that's all broken down. There's the pension. Again, that's not taken away, but it is taken away. You just get it locked up for 40 years or so. Bit of student loans starting to come in because you're starting to earn over the threshold. And so actually starting off at £30,000 a year, you're taking about £1,900 home in your bank account to go and spend on whatever the fun bits that you'd like to spend it on. So let's see how that works out. First pay packet. Don't worry too much about your first pay packet. As we've said, as Gudrun and Eb said, perhaps this first pay packet, it's not regular, it's not normal jogging, it's wow, fantastic, I now need to perhaps spend that on things like, well, the RCVS registration fees. That's always nice, isn't it? Welcome to the profession, give us some money. So you might have to pay that off. There's perhaps a credit card bill, there's the rent or the deposit on a house that you've rented, whatever it is. There's probably a load of weird one-offs that you need to sort out between going from a student to going to becoming a professional vet. And if you've got anything left over, buy something nice. Buy a flat screen TV. I bought a TV with my first one. I think it sounds like Ebbs bought an Audi A3. Well done, happy days. But don't worry too much about getting all sensible at that first pay packet. What we're looking for is that regular pay packet. Once you start getting a regular amount of income, you can now start budgeting and thinking about how you're actually going to spend that. So budgeting, very boring, something that everyone says, go, you need to do some budgeting, and everyone says yes, and then doesn't do it. But unless you're earning a huge amount of money and you don't need to worry about what's in your bank account, it is vital to make sure that you are in the positive rather than the negative. Work through your budget, and again, this financial health check is in the digital delegate bag. You can print it off, download it, have a look at it, work through it, and start off with the amount of money you're actually going to be getting paid each month. work out what your fixed and discretionary costs are, the stuff going on your mortgage, on your rent, on your council tax, on gas, electricity, paying for that Audi A3 down payments, but also all the fun stuff that you need to make life worth living. You know, perhaps the socializing, the Netflix account, the booze, the pub, the hobbies, the going to the cinema, whatever, when we're allowed to, whatever else that you're going to be spending it on. And hopefully at the end of that, at the end of your budgeting, there will, fingers crossed, be a positive number. If it's a negative number, then you perhaps need to have a little think about where you're throwing your money around. But hopefully there is £100 or £200 left at the end of each month that you can say, right, that's my excess. That's what I've got left over. Now we can have a little think about what we're going to do with that. So finally, once we've gone through that and worked out what we've actually got left over, we now need to have a think about what we want to do, what we can protect. Now, you can insure yourself against pretty much everything. There is nothing really that you can't insure yourself against, but again, it ends up costing you an awful lot of money. So you need to start, especially when you don't have vast amounts of cash, you need to start having a think about what's important to you. What are your priorities? Now at VetYou, we've sort of put them into three categories. We've put in protecting your income, protecting your health, and protecting your future. Income's around income protection, health's around private healthcare, and future is around pensions and savings and stuff like that. But it's more about putting the emphasis back on you guys to have a think about what's important in those orders for you to start off with, and then as your income goes up over your career, perhaps you can start to change and start to have more and more insurances. Also, it's important at this point to keep reassessing this. Just because what's important to you today or just after you qualify, that will probably change as your life progresses. You might end up getting a mortgage, you might end up getting married, you might end up with dependents, having kids, having elderly relatives. Your life will change and who you need to support will change, and so therefore what you need to protect will change. So keep making sure that every now and again you go back into this, reassess what it is, and have a think about, am I fully covered? Have I got the protections that I want? So I'm now going to hand over to Andrew, who's one of our financial advisors who we work really closely with at VetYou, and just sort of gets the veterinary income and gets the veterinary professionals that we are. Andrew.
Good morning. It is still morning. Good morning. Hi, everyone. Right. So I'm just going to go through a few key points that you need to consider in the first 100 days or when you first start your role. So Paul and Goodwin have covered some really, really key points. Before we even start with all of this, what we need to do is evaluate where we are. So using the income and expenditure document that Paul just highlighted is a great place to start. But you can make it even simpler and just have yourself A4 sheets of paper, income on one side, expenditures on the other side, and then work out what your disposable income. If it's £200, that's fantastic. Then you've got a starting point. So before we start any kind of financial plan, it's important to have an emergency fund. So typically when I'm speaking to clients, we say 3 to 6 months, but this can be different for everyone. With your emergency fund, make sure you've got that in an instant access account, building society, but keep it separate from your current account. Personally, I've got 12 months, but that takes a lot of time, a lot of dedication. And it's not about giving up everything else just to build that emergency account. As Paul mentioned a moment ago, it's really about your own personal plan and what works for you and what you know you'll be able to apply consistently. So first thing, get your emergency fund, and then have a plan about beyond the 100 days. So what do you need to save for? Do you need to save, or do you plan to save for a deposit or a new car or even a big screen TV? And if you're doing that, that's what we refer to as short-term money. So whatever your objectives are in your plan, divide your cash or your funds to meet that objective. So you'll have an emergency fund, and that's one objective. And you can choose to achieve that within the first 3 months, or you can choose to achieve that over the course of 12 months. And then you have a separate account for short-term money. And typically short-term money, you're not interested really about a huge amount of return because you want that capital there when you need it. And then you've got things like medium-term and long-term, and that can be to do with saving for retirement. I won't go into too much detail about the different tax products and things like that, but all you need to get out from this section really is about divide your money so it means that you don't dip into a particular objective earlier than you need to. If you can, automate the process. So there's lots of apps out there at the moment that automatically divide your funds that come in. I bank with NatWest, and they've got some new functionality on their accounts that allows you to audit your expenditure and also divide your accounts up. So start saving, save early, and automate if you can. Now, quick example of why it's important to save early. So we've used an average vet on £30,000 per year. If you're saving for retirement, and let's say your objective is to retire at age 60, you'd need to save £500 a month on a modest return of 5%. That would give you £600,000. Now, the same student, but they start that process later in life, so at age 30 and not 24, they would need to save an additional £100, so that's £600 a month, and it would end up £100,000 less at 500k. So that just quickly demonstrates the reason why in any of these endeavours you should start early and have a plan. So we've moved on to pensions, because a lot of our focus is we're working, so hopefully we can retire at age 60. I'm probably going to be working till age 75, which is really depressing. But mortgages are a great vehicle to save for retirement. At its core, it allows you to contribute, and so will your employer. The government gives you a bit of extra money on there, so every £100 that you put into your pension, the government will give you an extra £25. That money is then invested for you. The investment growth helps increase the portfolio value. So when you come to retire, you'll have hopefully a huge pot to retire on. You'll be entitled to 25% of that tax-free. Because of changes in regulation, you'll be able to withdraw those funds as and how you like. So that just offers great flexibility in even able to flex your drawdown in terms of the income that you receive through your retirement. It's just really important that you start early. So Paul mentioned earlier on about your employer having to contribute 3% and you 5%, which is referred to as auto-enrolment, to encourage people to save for retirement. Now, when you use those figures, that's almost half of the figures I've just stated in terms of the £600 figure. So it's important that even if you don't start at £500 per month, because you may not have the disposable income, but it's important that you start. So even if it's £50, even if it's £100 a month, they always think about increasing that. So through your career, you would expect your income to increase. And if you're anything like me, as soon as my income increased, so did my expenditure. But that increase in income gives you an opportunity to pass down some of that onto your retirement fund, because if you've lived comfortably on that previous income, you'll continue to be able to do so. So I'm not saying don't have fun, but I'm asking you to consider the various options about securing your financial future. And that leads us nicely onto the next slide, which is what if? What happens if something like coronavirus or an injury at work impedes that progression in terms of your ability to accumulate your wealth through your working life? So broadly speaking, you have life cover, you have income protection, and you have critical illness. And we're just going to talk a little bit about this over the next few slides. So the next slide that we're going to look at is life cover. So broadly speaking, this provides you a lump sum should you die early or premature. You can have term assurance or whole of life. Essentially, a term assurance is usually what you would take out when you have a mortgage. And all that means is, in English, is it's for a specific term. So typically 25 years or 30 years. And if you were to die prematurely during that period, it'd pay out a tax-free lump sum. Or you have a whole of life policy. As it sounds, it covers you for your whole of life. Whole of life policies typically tend to be more expensive. Within that, you also have something that's called family income benefit. So rather than having a lump sum paid to your beneficiaries or your surviving family, it pays regular income. moving on from that, and something that's probably a little bit more important in terms of your order of priorities would be income protection, which I believe is on the next slide. Now, income protection never completely replaces your income. What it does do is pays a percentage of your income. Now, typically that's between 55% and 65%, maybe a little bit higher, maybe a little bit lower, depending on the provider. Whenever you take these policies out or you investigate these policies, always look to take out on an own occupation basis, which ensures the higher probability of it paying out. Another consideration when you take income protection out is having it indexed or inflation linked. And all that means is the benefit that you've decided to insure against increases with either inflation or a fixed percentage. And the benefit of that is that we all know that the cost of living increases year on year. And this allows you to legislate for that. There are different kinds of income protection. The more comprehensive cover will cover you up to retirement age or a much longer period, or you can go for less comprehensive cover, which is essentially cover you for 6 months, 12 months, or 2 years. Now, just to give you an idea of the cover, healthy individual age 24, getting cover up to age 65 and benefits of 1,500 on a monthly basis would be approximately £40 a month. Now, you can get cover cheaper than that, and there is cover slightly more expensive than that. And again, that will depend on the underlying provider. A couple of things to take note before we move on to the next slide is that the premiums will be based on the type of occupation you have, what activities you take on during that occupation, your age, your lifestyle, whether you smoke, whether you're a drinker, whether you're a rock climber. And also something that's really important is a deferment period. And a deferment period is when the policy would start paying out after a successful claim. So you can have a deferment period from day one, or you can have it as long as a year. So this ties in nicely to having an emergency fund, because if you've been able to build up an emergency fund, you can push back the deferment period, which will have the effect of decreasing the premiums that you're likely to pay. So on to, I believe, our final slide, which is critical illness. So again, really, really important. Critical illness, similar to a certain extent to income protection, but this isn't related to your employment. Again, it's a tax-free payment. You can add it as a lump sum. And this one, it's more specific. So typically covers things like heart attack, stroke, and cancer. And there will be some additional covers there depending on the provider that you use. And it can be taken in conjunction with life insurance, and often people take out a mortgage. As a country and a nation, we're massively underinsured, whether that's income protection or critical illness cover, and actually you're more likely to get a critical illness than die prematurely. So it's certainly something that you should consider in taking out. And again, this, depending on your needs, this doesn't have to be overly burdensome in terms of the premiums that you pay out. There are some policies that will cover those core conditions that I mentioned, which will help reduce the premium cover. So we've carried out an exercise before whereby if you do have a disposable income in the region of £100 to £200, you'll be able to get cover in all of the areas that I've just run through a moment ago. And if you just move on to this slide. So the final slide is just to really draw it all together and just to highlight the fact that financial planning isn't just about one of these areas that I've just talked about. It's all intertwined and it's all linked. And what you should really get from this very brief message is that VetYou are providing an arena whereby you're comfortable to talk about your finances and you're willing to engage and get advice and get support and get guidance. But what's really important before we move on to the next speakers is make a note, make a plan, and take action. Thank you.
Paul, you're muted, so you just need to unmute yourself.
I'm back in. Hello, sorry. I didn't want you hearing my kids telling me how great Peppa Pig was. Great. So from that today, this was just a quick overview of the different products that are out there. We can't go into too much detail because everyone's going to be slightly different. So the big call to action now today is to get in touch with us, get in touch with VetYou. There's some articles, products, bits and pieces, explanations, videos, blogs, etc. on the website to give you a little bit more knowledge and a little bit more understanding, because it is nervous, it is scary going to have a chat with an independent financial advisor, going and talking to professionals. It's a bit like how your clients will feel when they come and talk to you. It is a little bit scary when you feel that the professional has all the power and the knowledge and you have none of it. So hopefully at VetYou, by having a bit of a read around, getting on newsletters, etc., you'll start to understand, at least know what you don't know, rather than having no idea what you don't know, so that then when you go and talk to the financial advisors, you sort of have an idea, you've thought about what's important to you, what your priorities are. So the big call here is just get in touch with VetYou, have a look, increase your understanding and knowledge and exposure to the financial world. And then if you decide to do nothing, that's great, because you've decided, rather than you end up not doing anything just because you didn't know and you buried your head in the sand. Over there on the other side is the swag bag. If you click on that link, I think Ebony's popped it up in the chat box, or if you click on the QR code, it'll take you through to a load of resources that we've put together, some YouTube footage, some great websites, some articles, some bits and pieces. Like I said earlier, a pay statement where we've sort of ripped it apart and explained what all the bits and pieces are. So you can click through and read those bits that are important to you as you go over the next few months, whenever you think I've got a bit of time and I need to upskill my financial side to it. So now we're going to sort of move on and open it up to some questions. I know we've had a load of questions on the chat box and also some questions on the on Jamboard. Don't know if we pull those together, and then in a bit we'll perhaps split into groups and do a bit more focused.
Super. We've got some great questions both on the Jamboard and in the chat. And Rosie's one in the chat, I think, is a great one to start with. Excuse the building works, sorry. If you get injured at work, is your employer liable to pay you anything, give you some form of income protection? Andrew?
No. So from what I understand, most veterinary roles don't come with much, if at all, many benefits. You can get statutory sick pay, which is not very much and is for a limited period, which is why we were highlighting the need to consider income protection. So when you are looking at your potential employers, I think one of the things that was highlighted earlier on by Paul or Gudrun was that, you know, it's not just about the bottom line sum in terms of the salary that you're being offered. It's what other benefits are available and how are those implemented, and then it's assessing that in its entirety. But for the most part, most of us or all of us should have some form of income protection or resource to support us if we are injured and out of work. And that's what income protection is for.
Yeah, so I think statutory sick pay is, I think, about 150 quid a week. So if unless it's in your contract, and unfortunately vet employers are fairly stingy compared to other professions out there, you'll get nothing apart from going on to statutory sick pay, which is about 156 pounds a week, that's difficult to live on. So you need to, I would suggest, think about income protection quite strongly. Ebony, didn't we have some stuff from the BVA in terms of how many people were injured, especially in large and equine, over the last year?
Can give the full facts there, but I have a feeling around 61%. Is that correct, Gudrun?
Yeah, so we've got there's an article, I think, on the VetYou.co.uk website where we go into it in more detail, but the British Veterinary Association did a survey on vets getting injured, and it was around 60% of vets in farm and equine. Again, check the facts, absolutely, that did get injured. Now, obviously, injuries can be from something that you can still work with to something that you can't work with. And I think we all know people who have had to take time off, and sometimes significant time off that has taken with fractures, with whatever has happened, because of the role that they do. So veterinary professionals are at greater risk, and there is evidence to say that we do get injured. But also, it's not just injuries at work. It can be injuries, any kind of injury or illness that takes us away from work. So it's just worth thinking about, how can I support myself, but also any dependents that might be there, which is why, as Andrew was saying, get some advice on it.
Just to add, your employment contract will detail the length of period that your employer will continue to pay you a salary for any period you have to take off due to ill health. Now, whereas maybe 10 years ago, many employment contracts were relatively generous, and many veterinary employers would be paying their employees for periods of 3 or even 6 months during a period of ill health. Unfortunately, many contracts nowadays are for a much shorter period of support. And you'll probably find that, unfortunately, many of the corporate contracts may be only a period of a matter of a couple of weeks before they then move you on to statutory sick pay. So support, if you end up in one of those positions, obviously you've got to be able to then budget either using your emergency funds or by protecting you through one of these policies if you're likely to have a period of ill health that's going to keep you off work for a longer period of time.
Thanks for that. So we've got some really good questions around savings, some good questions around pensions. We've also got some really good questions here about that negotiation part. And in your digital delegate bag, actually, Paul's done a video and an article on that. But I think this is quite a nice question. As new grads, we don't get to negotiate too much, and people don't talk about salaries. How do we know if we're being paid well in future years? So how do we actually establish our worth factually and get remunerated appropriately? Matt, I can see you nodding away there.
Yes, it's an area I think that we haven't done very well as a profession here in the UK. If you work in Australia, there is a career structure for your first 6 years in practice where you know exactly how much you're going to earn, irrespective of where you work and the type of role that you do. But in the UK, it's very much a free-for-all and starting to understand your worth to the individual veterinary practice and the individual veterinary business. So I would encourage anybody in their first job, to try and understand what their worth is. So that may mean speaking to their employer about how well they're doing personally in a clinical role. You may be also interested in the amount of money that you're bringing in for the practice. And I think you really should start to understand what impact that will have for your employer, but also make sure that you're fairly being rewarded for the effort that you give in your first job.
And I think I'll just chip in on this one because it's an area that I've been working on quite a lot and a bit close to my heart, particularly around equality of pay. And I would say, I mean, there are some surveys out there. So SPIVS does do some surveys. Unfortunately, the numbers aren't great. CM Research through the Vet Record does do some surveys. So it is worth using those as a ballpark figure. And the British Veterinary Association and a group that I'm chairing is looking at what is a good workplace. And it is around having these conversations and appraisals. But I would say talk to your employer as well. Ask them. It's sometimes an uncomfortable conversation, but ask them, go through your appraisals, ask your colleagues. In a lot of countries, Scandinavia in particular, they're much more open and transparent about pay. And if we are open and transparent about our pay, it actually brings everybody up. So I would say you need to talk to colleagues, talk to your employers, and engage with your appraisals. You engage with your appraisals and understand what your pay is made of. So a lot of it at the moment, because we don't have pay scales, some do. So I've worked in charities that have pay scales and businesses that have pay scales, and that's very helpful. But talk to each other.
Can I just add in a quick comment? Do you hear me out there?
Yep.
Yeah. I'll just add in a quick comment. My background isn't veterinary. I'm an accountant. But the one thing I would say as well to add to that, and it goes back to what we've covered earlier, is it's really important to understand what you're being offered, in that you might be getting a pay rise, or you might be offered a car, you might be offered all kinds of things. And it's really important to understand how much that's worth to you in your pocket, as well as understanding whether it's the right market rate. So most employers will be able to run scenarios for you where if you have a car or an electric car or CPD or accommodation, and they should know what the tax implications of that are. So I think it's just really important to make sure that you understand how much of anything you get given by anybody you're actually going to get yourself.
Super. Yeah. And it's also really good just to keep a log. I mean, we have to do reflective practice anyway, so keep a log and evidence what you're bringing to the practice and what you're bringing to your work. I use that to negotiate things in my first job, and that was really helpful. So just keeping it really factual about not only the cash you're bringing in, but the currencies you're bringing in culture, in learning, in supporting your team can be hugely used to leverage in a really good way. Leverage for yourself and your own progression, but also for the progression of that practice or organisation as well. And I just had Luna, someone just commented saying, cute dog, I just had Luna, and she came up to me and I realised there was a reason why I actually wanted to feature her. And Andrew knows this all too well. I realised that I was paying more in her insurance, my horse's insurance and my 14-year-old pointer's insurance than I was on my own health. And that is absolutely ridiculous. You know, the fact that I'm willing to support and make sure that she's all right if something should happen, but I haven't done it for myself. That's just a really important thing to note, because I know a few of you have anonymously messaged me about saying, yeah, your fixed costs with regards to your pet insurance, you know, is yours featured in there? Because if you're not great, you can't look after that dog anyway. So, you know, that I think is a really good thing to remember in there. So we've got some really good things here as well on pensions here. So I know that Emily asked a really good one about having obviously your employer's pension, but also potentially having your own pension that you can access as well at any time, and it moves with you wherever you go in the world. So we've got a question here. How do you pay more into your pension? How do you find out how much is in your pension? So Andrew?
So when you're auto enrolled, you'll be sent information by the scheme administrator, and you'll also get an annual statement. These days, you'll have online access. Typically, from an investment perspective, you'll be put into something that's called a life strategy fund. All that means in English is the younger you are or the further you are away from retirement, the more risky the investments you'll be in to give you that better return. As you approach retirement, it's automatically changed to de-risk the investment, so it's less risky and the capital sum is there. So you'll always have an idea, or be able to get an idea of how much you've got in your pension. And more importantly, the pension that you have with employer A, let's say when you graduate, should you leave them in a year, 2, 3 years time, you'll be able to take that pension with you. And typically employer pension schemes are quite keenly priced. And that's also an important aspect when you're saving for retirement, trying to keep the costs down of the pension product as well. Does that answer the question?
Thank you. That's great.
Can I add on pensions?
Yeah,
because it's quite current to me. So my background was different. I started work when I was 16, and when I was 18, my boss, I put on the chat, was forcing me to save some money. Best thing I ever did, but also I had to start my own pension, and it was suggested to me an amount to put in, and it seemed quite a lot at the time. My story goes on. I'm now 52. I retired 2 years ago. And the reason I was able to do that was because I invested well in pensions and got some great advice off my advisor twice a year or more to make sure that the funds were in appropriate places. So it just goes to show that if you start early, you can get early at the other end if you're lucky.
Mm-hmm.
That's a super reflection, and I wish I'd done that. Don't laugh at me, Andrew. Andrew's helping me out a lot at the moment. Some other questions coming in here. Some new graduate programs offer a sign-on bonus of something like 2,500 in the first year. How much tax will I have to pay on this?
Yes, that's one for me. I mean, it's going to be income tax and national insurance, as we said earlier. So you've got to allow basically a third of it will go. The one benefit could be that if you're getting it as a sign-on bonus in your first year's salary, because your earnings might not be for a full year, you might end up getting a little bit more of it in your first year because you won't be earning that much above the tax thresholds. So, but bank on a third of it's going to disappear.
Mm-hmm.
Super, thank you. And actually, it's been really interesting looking at, on a scale of 0 to 10, how prepared do you feel? We've got some people who are already taking a lot of good steps with their finances, and there's a lot of numbers there which I can relate to, which is not feeling quite kind of so secure. So just another poll here, just to kind of see actually what products or solutions maybe have you already invested in or got. If you haven't got any, don't worry at all, but it'd just be good just to see the lay of the land here about what you actually have. Because this is such a good time to start thinking about this. I never had anyone come into my family here and talk to me about this stuff, and I wish that had been so. So while you're doing that as well, we have some other questions about if you work abroad. So if you work abroad in a country where taxes are reasonably low and you can save a lot, how can you bring that money back into the UK? Are you taxed on it?
I guess that's coming my way. So you'll generally be taxed in the country where you're working, but the answer to that is, I'm afraid, it is quite complicated, and it depends how much you're moving around and when you move in tax years. So I think the simple answer on that to me would be, you really do in this instance need to speak to an accountant to say which country you're going to, what are the tax rates. A lot of countries have what they call double tax treaties, so you only pay effectively tax in one country and the other rebates you. So I'm afraid it's not actually going to be a very simple answer, and it's one that you should take specific advice on, because it depends on the country and it depends how long you're going to be moving from and between countries. Sorry, I can't be any more specific than that.
But this is a really lovely example of where it just pays to go and get that professional help and support. This is a perfect example. And if you can build up a relationship now with a financial advisor that you click with and that you like, that can help you throughout your life to make these decisions and to navigate these kind of unknown waters for us, you know. Like I said, you know, I wouldn't ask like my plumber to cut my hair. Do you know what I mean? Like, and I wouldn't expect every vet to be able to deal with all their finances. So again, a really good example.
And I think
you might be asking your plumber to cut your hair at the moment because you can't get anyone else to cut it.
That's very true, actually.
We do. We have had coronavirus haircuts in our house, I have to say. But so I was when I first graduated, we did have a financial advisor come, and I did what I was told, which is unusual. I took out a pension. And I think, as I put in the chat box, when I look at my pension now, because I just put it in my first 100 days, the amount of money in there now, if I thought I need to start saving to get to this kind of money, it would have been completely daunting. And I would have used that money, if I hadn't been saving, to do something else with. I know I would have done. But because it just came out, it's now there. And there's a degree of sort of calm-ish that I've got something there. I just need to know I need to reflect on it. But through VetYou.co.uk, you can get a free consultation with a professional financial advisor. So if you go to the website and follow it through, you can get your first consultation free. And Andrew really isn't scary. He's lovely. I know we've talked about scary financial advisors, but he isn't scary. But I just wanted to touch a little bit on financial paralysis. And again, there's an article on the VetYou.co.uk website. And brilliant, so many of you are on this, because at least you're there, you're engaging, you know you've got to at least find out about it. But I'm one of those people that's very risk averse. Ebbs and I are incredibly different. I'm very risk averse, so I feel I can't make a decision until I have every piece of information there. And sometimes that stops me making a decision. But that's why, a little bit why the VetYou.co.uk is there, to help people a little bit like me gain some of that background information and then go to Andrew. And certainly for the pension thing, going to a financial advisor was the best thing that I did for 18 years later, which we say very quietly.
And the other thing is that the rules and regulations around investments and pensions change all the time. You know, maybe 20 years ago, we could have relied on a state pension to meet all our retirement needs, but that probably isn't going to be the case for many of us now. And having the discipline of having a relationship with an independent financial advisor and the regularity, because they will be speaking to you and contacting you at least annually, really helps you to stay up to date with any changes that you might need to make with any of your investments or with any of your life plans regarding your finances.
Yeah, super. So on the poll here, about 50% of you do have invested in your financial future, about 50% of you. And of that 50%, all of you have investments and savings, 7% have private insurance, about 14% have health insurance, and no one yet has income protection. So that's obviously a good gap to look, you know, when you do go into that workforce. And on that investments piece here, we had a question. Sorry, the build is awful. What are the best ways to save? Traditional savings accounts, ISAs, stocks and shares, in brackets, if you can accept a level of risk. And you just obviously said, Matt, that the world, you know, the world is changing, but also where is best to place your cash. So I don't know, Andrew, if you want to say anything about what is the best way to save right now if you were a graduate.
So, you know, I have to give a general response, and that will be, it depends what you're saving or what you're investing for, and how much you rely on that money. So when we talk about it with clients, we talk about capacity for loss. And all that means is if the capital value that you've invested was to drop in a particular value, would that have a material impact on your lifestyle? So, you know, interest rates record low. If you've got a capital sum, or you can invest a regular amount of money, and you want to be able to access those funds before retirement, and you're willing to take on some risk, then a stocks and shares ISA would be a good place to go. And then it's a question of, do you have the discipline, as mentioned a moment ago, to do that on your own and the time, or do you need support with that? So with all of these things you can do on your own, but you take on the responsibility about getting that right and keeping up to date with any regulatory changes or changes from an economic or investment standpoint. Or you can engage with an advisor like myself through VetYou, where we're able to help you set that up by carrying out a fact find, which is essentially a discussion about your current circumstances, what your objectives are, and what your timeframes are, and working out how much risk you're willing to take, and putting a plan in place to help you achieve that. And also, Matt mentioned a moment ago, being able to review that on a regular basis, whether that's on an annual or biannual basis. Does that help?
Ebony, can I add something in, Ebony, if I get 2 minutes? I think there's a couple of things here as well. I've looked across the questions, and some of them are quite technical around, you know, how do I set up a pension, that sort of thing, which obviously directly Andrew. I think one of the things we also are quite happy to offer is if there's anyone out there who is feeling this is a bit overwhelming and I don't know if I'm ready to speak to a financial advisor or anything like that, by all means, if you register at VetYou, we're happily, one of us will just pick up the phone to you and happily have a chat with you about where you are in your life stage of finances, so that you can have a chat about anything you might feel embarrassed about, stuff, whatever it is, and we can have a sort of a mentor session or whatever you want to call it, before speaking to someone like Andrew. So that's available as well if people feel that's a more comfortable start. And some of the questions on there, you know, might be more relevant in those arenas than necessarily directly to Andrew. So there's either option there, really.
So our kind of hour is up here. So I really want to thank everyone for popping all their thoughts into that Jamboard. For things that we have not covered, we are going to take this away. We will create some blogs and resources as well. So don't worry if we haven't covered everything in there. We're also going to stay open for another 20 minutes, and we're just going to split into some breakout rooms, and you're more than welcome to stay on. We can open up the mic and have a chat as well. But I think it's also really important when we do these things. You guys have obviously probably got Zoom fatigue yourself. You've been learning using this virtual world. And knowledge is great, knowledge is awesome, but it's only powerful if we action it. So I really want you just to pop into the chat box. You pop into the chat box now. What's the one thing you've taken away from today that you're going to maybe do something about? Not maybe, what you're going to do about. What's the one thing that you've taken away? Perhaps it's something that you're like, oh, I didn't even realize that. Or perhaps something like, right, I really want to go and do this. You pop that into the chat box, because I tell you what, when you write stuff down and you tell other people, you are more likely to go and do it. It's an amazing accountability framework, actually, just sharing what you're planning to do next. And I think that kind of peer accountability is also great, because you've got some really good people in your year group who are already doing great things as well. So I think it's so important that we share that. You know, one thing that, you know, VetYou does a lot of things. It connects you with financial advisors, it provides you financial solutions, but we're also here to open the conversation on money, because there is still a lot of stigma around our finances. So I think if the more we can share, the better. So we've got some great things here coming through. Looking to start saving for a pension as a new grad rather than years down the line. Chloe, I wish I was you, that was great. Emily's gonna do a list of things to sort after exams at the start of work. So we'd like to get a financial routine with my first pay packet. Absolutely excellent. And Emily, you know, you contact us and we can support you, and alongside people like Andrew. Rosie's going to get income protection and make a financial plan for urgent, short-term and long-term. A great thing. We will also put in the digital delegate bag a really good video and article on income protection. So all the things to consider when you're going down that route as well. And again, Olivia's saying income protection, Kate's saying the same. Stephanie's saying start pension early, don't bury my head in the sand. And this is precisely what we wanted to do. We wanted to stop people burying their head in the sand and not be an ebony in your finances. Yeah, be more Gudrun. Be less. And Victoria's going to look into income protection, set up a pension, write out a monthly budget at every payday and plan what can be saved for the short and the long term. Jennifer's going to try and find a good budgeting app and look at what plans and pensions she needs to start sorting ahead of her first pay packet. These are all really excellent things. Yeah, brilliant. Absolutely brilliant. And do check out all your own banks, because a lot of banks are adapting really well and wanting to provide that ease of budgeting. I use Monzo, which is really, really good because it puts everything in buckets for you, and you can put your own buckets and percentages, which is great. Super. So what we will do now is we'll also pop our email in as well. And we will split in to breakout rooms. Now we're aware some people have to go, and we get that, so you know, feel free to, you know, if you have to leave and go and do other stuff. But if you want to just sit and have a chat with some of us, then we're going to just split into breakout rooms, just have a further conversation on anything money related, because I know things are probably pinging in your head now about things as you've learned more today. So I'll just create a breakout room. If I can do this. Any more questions? Keep them coming through as well. Okay.
If we put the questions up again, Ebony, when you've done that, and then if anyone wants to ask any more, if not, we could go through some of the.
Yep.